The degree of discipline that you need to have in order to do this at a high level is unlike anything I've ever done before in my entire life. I've played high school sports, I've played Division II basketball, I've done a lot of things that required like a lot of discipline, but this is like no other.
Hey everyone, welcome to our first episode of Alone Together. This is the first podcast that talks about solo GPs in the venture community, at least the one I've done. I'm Mike Ma, I'm managing partner of a newly minted fund that we just had our first close at Serac Ventures. And I really, when I did this, I wanted to start talking to other solo GPs who are doing what I'm doing as I've gone through the fundraising process and started on my own firm. It's just been really inspirational for me to meet with other people. And so I wanted to make a podcast and bring my friends together and really just chop it up and give an honest, unfettered talk about the stuff that we go through. It couldn't be a better person to chat with first than my friend Kevin Moore at Serac Ventures. And I've known Kevin for a couple years. I think my favorite story to think about us is when we were at Culture Shift, and you were afraid you weren't going to make your flight home, and there was a good chance that you were going to come stay with my house to like come crash with the family. So yeah, it's with that thought that I was really excited when I thought about the podcast about doing this. I just sent you a text like, "Hey, would you do this?" And you said, hell yeah. So while you didn't end up in my home, actually, you are here virtually. And this is my very messy office why I won't turn my camera that way towards. So with that, I'll just, thanks for coming on and being my first guest.
No, thank you for having me. I do remember that story. And I never, ever have problems flying in or out of New York. Maybe one time because of the weather, but usually it's been pretty smooth.
Yeah. Well, I don't know what was going on that weather that day, but it was something. It was just, I remember it was like, did you get home okay? And you know what was really cool about this is, and this sets up I think this sets up the podcast. We knew each other as people before investors. And what's been really cool in the year and a half or 2 years, I don't even remember since, we've actually co-invested in some deals. We've talked fundraising, and I consider you a friend in the industry. And I thought that was a good backdrop for this podcast, because we're all out here being solo GPs, and solo GPs get a lot of shade, a lot of hate, I think, and a lot of misunderstanding, at least in the community. So I just thought we would just have a conversation and just kind of talk about what you're building, not so much to like pitch and why I'm so good and do chest beating, but just have an honest conversation about what's going on and give people an inside look under the covers.
No, I like that. I have been toying around with a blog that's sitting in my blog sort of catalog of this sort of movement of solo GPs, and is this the new thing, and what are the benefits, pros and cons of that? I think, was it Stepstone who wrote a paper about this as well? I've been thinking about it quite a bit. So if we could discuss that, that'd be cool too. And, the solo GP life is, I think, very, very similar to being a founder at a tech company, because you are kind of out there on your own, a lot's depending on you, and we have to think about technology, systems, all those different things. So it's a great idea to start something like this, because you're going to hear a lot of different stories of how people think about this life.
Completely. I'm here for it. So let me jump in with that with you. Talking about this life. Tell me about your life. Like, tell me about pre-Serac. Just what in God's name led you in your life to this little part? And go far back as you want on this, because I always think this is when you say being a solo GP is tough, or like a founder, I think it's like, at least the fundraise process has been like stabbing myself in the eye. So I'm always curious, what have you done in your life to deserve this lot?
I'm reading this book that talks about people who had like turbulent upbringing, or they tend to be entrepreneurs when they get older. And a lot of that had to do with their ability to handle stress. And I think that there's some truth to that because my upbringing was not smooth. So experiencing turbulence in my career life is always comparative to the feelings that I had when I was growing up. When I graduated from college, I went to work in financial services, and that wasn't my first career. I'm very non-traditional VC. I got my degree in civil engineering, and then I went into finance, wanting to help people. I didn't grow up with a lot of money, so I wanted to help people manage theirs. And that was really empowering. So did that for like 6 years. Then I went into more of a regulatory, like government style job working at the Federal Reserve Bank, which was really a pause to think and reflect on what I really wanted to do long term. And that was return to this desire to build my own firm, run a VC firm. And at that time, I was thinking whether it's going to be private equity, VC investment, I'm not sure. But VC seemed to check the boxes on all the things that I wanted to do. So worked in that for close to 10 years at a VC firm here in Oklahoma City where I'm at. Then I went to work on the institutional side, learned a little bit about how fund of funds works and just institutional investors, and then got to a point where I felt like I'd learned enough to start my own firm and take this approach to doing something different that other people in the industry weren't. And that's the short story history of Serac Ventures. And to now actually be doing it is the realization of a dream that started like almost 20 years ago.
It's wild. You said VC tried to tick the boxes that PE didn't. Can you say more about what some of those boxes are?
Well, when I was
PE or other?
investing in the public, yeah, when I was investing in the public markets at Morgan Stanley, it was really exciting to work in an office that was getting shares of Facebook allocated so people could invest in that company. And the brokers running around the office like chickens with their heads cut off, trying to figure out how they're going to get an allocation for their clients. And when Tesla was like $30 and looking at all these tech companies, and whenever I started investing my own money years ago, I was mainly focused on technology companies. And I was investing in things that were around me, things that I was using, whether it was SanDisk with the USB drives. I had an Apple phone in 2008, so I bought Apple stock. Literally at that time, Apple was like $30. And the feeling about getting into venture was I'd love to get closer to these companies before they go public. And venture is like the perfect platform to allow that. But also wanting to build and invest in companies, venture allows you to get close to a lot of different types of technologies and sort of weave your way in and working with these founders who kind of want your help and your capital to help them accomplish big things. So venture was a good fit. And maybe this is some sort of psychological thing, but I love living in uncertainty. Yeah. I don't think that's a trait that many people outside of this industry kind of seek, but the uncertainty of it doesn't bother me. Like that it's very exciting to me, and venture is all of that and more.
Yeah, I want to get to talking about Serac, but I want to jump back to one thing that you said because so much resonates with me. When you talk about being venture and you drew a line to your life of not having a lot of money and wanting to help people, like how can you connect your, like why you picked this area into what your Kevin Moore, the person was, and why these lines are so important for you between your personal lit life and your investing life?
I think the number one thing about venture capital that I'm able to do now through Serac Ventures is this whole mindset of access and accessibility. Venture capital is one of the most powerful wealth creation tools this country has ever seen. When you think about companies that were venture backed in the stock market and what they've done, whether it's Google, Microsoft, Amazon, all these companies were venture backed. But historically in this country, people like me haven't thought about venture capital as a thing that should be included in something that they can invest in, nor were the legal system set up such that regular people could even access it. So I think that tide is changing a little bit with not only laws, but also more people like me to go out into areas around the country to talk to investors who have means, they have resources, financial resources to include something like this. They just need visibility and education on it. And I know one of the things that I mentioned or I was thinking about in our sort of precursor to this call is why net new investors are important to Serac Ventures. For me, it's a huge testament to look at our LP base and say that roughly 70% of our investors have never invested in venture capital before. I mean, that's a big deal. But a lot of that stems from what I did when I was working as a financial advisor, going into places in the market where I didn't see other people that were down there talking to people who had means. They just needed the visibility of this particular opportunity. Being in Oklahoma provides a phenomenal opportunity to talk to people with tremendous resources, but they just don't have access to the VCs that are on the coast. So I feel like we're well positioned to build a firm that is supported by people that are excited about this space, and they can do it with someone that can talk to them in a manner that's accessible, easy to understand, transparent, and provides them with all the things that everyone else has had access to for decades, and to do that in a manner that is also in line with what we're trying to do as a firm, with providing access to capital to founders that traditionally don't have it. So it's like the best of both worlds.
And you said so much I want to tuck into, and you hit like 4 or 5 questions that span our friendship. But before you, like, just to level set for people, and I know you want to hear and pitch and why you're the best, but just for context, and you've talked about Serac and access. Can you just double click a little bit to set up the rest of the conversation on Serac Ventures, your thesis and what you're interested in investing in?
Our thesis is quite simple. We are an early stage venture capital firm that invests in founders and geographies that are underserved by mainstream investors. My background is in financial services, so naturally we look at a lot of companies in that space, fintech sector, that maybe it's lending or new financial products or accounting products. I think the paradigm has shifted in how people think about work and technology and security. So the future of work vertical is really interesting to us as well. So thematically, that's what we're looking for as a firm. And we've made a number of investments so far that sort of tick all of those boxes. Founders who are in geographies that don't get much venture love. They have a strong affinity with the customers that they're serving, meaning that they can intimately relate to the problems because they were those customers. And they also have the industry experience to actually build solutions for the problems of people in that community. In fact, one of the deals that we're co-invested on, solo funds, when you think about the story of those guys,
Yep,
growing up in sort of urban Cincinnati and building a product.
I mean, when Rodney said it, I mean, just to keep it real, like I sourced them when I was at the HBCU Founders Fund, and Rodney was like, I think the verbatim was like, "This is how we loan money in the hood." This is what, like, it was straight up, and I was just like, "Okay,
Exactly."
that's what he said. And these aren't my words; this is his in the diligence column. That those were like, okay, and I think that resonates in so many different ways.
Yeah. So I mean, that's just a great example of a company that has access to this group of customers that a lot of people don't understand. And now they have over 2 million people using this platform. I mean, it's insane. So those type of things motivate us.
Right. It's the riches and the niches, right? And find sort of now.
Right.
Will you do a coastal deal? I mean, look, and I'm going to talk because you represent OKC hard, and I want to talk about unseen ecosystems, unseen. But you'll do coastal deals, right? You'll do New York, Bay Area, but that's just. Do I have that right?
Yeah, we have companies in LA, New York, Boston, some near DC. We have one in the South. We have a company here. So yeah, we're open to opportunities. I think starting Serac out, we wanted to focus on areas where we had a natural sphere of influence. So I spend a lot of time in Southern California, so I know a lot of people out there. I spent a lot of time in New York, as you know, and I live here.
Yeah. So look,
So
every time I think about Oklahoma City, I'm like, oh, you gotta talk to Kelly. I mean, I think of you like, so you rep Oklahoma City hard. Why? And what sort of what
you know
draws
what?
you to that?
At first, when at, at first it was one of those things where I didn't think about it like being a pro to Serac Ventures that we were here in the middle of the country. But now I look at it where investors think about it as such a huge differentiator that we're sort of outside of the group think and have closer proximity to deals that maybe other people aren't seeing and thinking about, but also thinking about it from the standpoint of really doubling down on this idea that just like we don't think about founders have to check the box on certain things in order to build amazing companies, neither do we as a venture capital firm. So I've really embraced the differentiation there because I've
Mm-hmm.
been in all those markets. I have networks in all those markets and understand from a different perspective what I think a lot of managers don't. I've been on both sides of the LP, GP side and traveled around the world. And technology has not only lowered the barrier for people like me building firms, but it's also lowered the barrier to bring new types of founders to the market that just weren't able to before. So I think that like you said, when it comes to a solo GP, there's been this massive paradigm in technology, accessibility, and visibility that even allows that to happen. And that's sort of what I started to write about in my blog post that I haven't published yet. Is that I don't even know if being a solo GP like we're doing would have been possible 25 years ago, at
Oh,
least
it
not
wouldn't have. I
on
don't.
like a scalable standpoint.
No way. Not with the tech and the ecosystems. I mean, I think to be honest, we have
No,
COVID to thank, better or worst, a lot for that. I don't think it would have been at all. All that being said, though, like what? So, but here you are. Um, tell me about like what are some of the things that make the solo model worthwhile for you? Because you're ahead of me in terms of the fundraising game. What sort of has been the most rewarding, and maybe also most challenging parts of going it alone?
let's talk about the challenging parts first,
Okay.
because I think people will find that interesting. The degree of discipline and that you need to have in order to do this at a high level is unlike anything I've ever done before in my entire life. I played high school sports. I played Division II basketball. I've done a lot of things that required like a lot of discipline, but this is like no other. It is a full out grind because when I think about a VC firm, there are four parts to every firm. You have your fundraising, which is effectively your sales, your marketing, which is talking to VCs, going to conferences. You have your internal operations, which is a bunch of other stuff, whether it's fund administration or legal. And then you have working with founders. And when you're a solo GP, if you don't have good systems set up, or especially in the beginning, you got to take care of all that stuff and you can't let any of it slip. So my thought is one of the hardest things about this journey has been doing all of that. And now that we've built a team, we can do that at a high level such that I'm not carrying the burden. But in the beginning, it can be really difficult.
All right. So, anyways, we're back. A little technical difficulty. We just started to talk a little bit about the journey of being a solo GP, and I think we have a lot of bumps and bruises through the way. So, I'm just curious about what are some of the tips that you have about being a solo GP? Stuff that you may not tell everyone, but just for in our little enclave of people who are nuts like us. Any thoughts?
We are nuts.
Totally.
Yeah. I think I'll share a story on how I got started because then there'll be some nuggets in there from that. Whenever the idea of this was kind of gestating, the first thing I started thinking about was I made a list of people who could potentially back the firm. And among that list were just individuals that I knew, high net worth people. And just before I was getting ready to go talk to these people, I had this idea that instead of trying to raise capital for the fund, maybe I should raise some capital so I can actually get the fund going. It's a smaller investment amount. It effectively was the organizational expenses that I need in order to get it going. And the organizational expenses for a fund can range from, usually in an LPA, they're like up to $250,000. For larger funds, it can be bigger than that, but for most emerging funds, $250,000 is, I mean, it's $250,000 that most people do not have.
Mm-hmm.
And the way that some managers will get through that is bootstrapping it, and maybe they're using credit cards, or maybe they're sort of saying in their LPA that they're going to pay back those organizational expenses from uh, management fees or distributions or whatever it might be. And that includes the GP commit. The GP commit is also a really big one that people have to think about. So
Mm-hmm.
I was thinking about all those different things as opposed to, we just need to get investors. Like, well, there's a little bit more than that. So yeah, just to correct myself, the fund pays for the organizational expenses. The GP commit can be paid back from management fee reduction to the GP, or through distributions from the fund that come down the line at some point. And because I was talking to a lot of institutional investors, I was worried that some of them might not take me serious if I didn't have enough of my own capital in the fund. So I got some courage from another VC that I know, who took some money from their retirement dollars and put
Mm-hmm.
it toward getting the fund up and going. And part of my strategy was taking some of those dollars, investing in some companies to show what were going to be some of the companies that the firm would invest in when it was up and going. So I took a risk, and I did that. Took The first investment was $50,000 into a company. The second one was 25,000, and then the third one was 50,000. In fact, the first one was solo funds. I put $50,000 into solo funds from my own money to show conviction that, hey, this is the type of company that I would like to back if we had a bigger pool of capital. And that was just absolutely critical in demonstrating conviction to LPs that my money was where my mouth was.
Yeah. Yeah.
And it also, go ahead.
No, I was in the same boat. I mean, I did half that amount. I did 25 into solo funds. It's my own money. And that was what I went to market with my fund zero. Now I think you and I are, we're in the same vintage. Like, we're lucky that we've had some time to amass some wealth to be able to do that, because it's not an easy thing to do. Um, but no, that was exactly what I did. I mean, the same thing. That fund one is basically just institutionalizing my process that I did as an angel, um, on my own money and my own dime. And it was hard. It's
Yeah, it
hard,
is.
but I don't know if it's gonna pan out. I hope it pans out, and I hope that LP. Do you think LPs like really give you credit for that overall? And I want to talk about LPs. You have a whole different view of LPs than I do, and I definitely want to get into that. But do you think it works? I mean, you do, obviously. Let me double click. How do you know it's worked?
Well, in the beginning, you here's how I know it works. I've talked to a lot of emerging managers who, their demonstration of their investment thesis to potential LPs has been, they are effectively paper trading into these companies where they're talking to portfolio companies and they're writing memos and doing all this work, but they're not actually giving those companies any money. So when an LP sees that, they're more like, well, where's your conviction? And conviction doesn't have to be $50,000. To me, conviction just has to be a meaningful number where you're actually sacrificing something to demonstrate that conviction. Whether it works out or not, we won't know. Statistically, most companies that we back early on won't. So I think that that's an understanding that you have to reconcile with. And if you can't reconcile with that fact, then you shouldn't be a VC. So I think that it definitely works, even if no one tells you explicitly that it doesn't, because it does.
Yeah.
So I think that that's number one. Number two, you really have to have a strong conviction to take those types of dollar amounts to invest your money into something to demonstrate that this is what I want to be doing for the next 10 years of my life or longer. And I'd been doing this long enough to really feel that way. And also, what if it does work out? And let's say I never do the fund, at the very least, I have exposure to these companies that I think are going to grow. So it's a win-win for me either way. So when I went to, go ahead.
No, keep going.
When I went to talk, I went to think about launching, I was like, okay, I know I need to get that part finished, but also need some working capital to get the fund up and going. So to all the solo GPs out there who either have started or are thinking about starting, see if you can find someone that really likes you and provide them with a well put together presentation about what you're trying to build. And that's what I did. I put together like a full pitch deck, not just outlining the fund that I was raising, but the firm that I wanted to build.
Yeah.
And I met with an angel investor who I'd met years ago. And I said to him, I was originally going to talk to you about being an LP in the fund, but I'd really like to talk to you about investing in my Manco so I can get some money to get this thing up and going. And I shared with him the bigger vision. And he said, I have backed a lot of founders and they didn't have near as well put together presentations as what you did about what you're trying to do. So I think that was a very wise, and I'm very thankful for him and the opportunity to even know someone like that to do that. But that was the launching pad to give me the confidence to literally quit my job and go 100% in this. I was going to quit my job or resign from my job anyway, but that made it so much easier. But it was very strategic to say, okay, I can get this thing up and going faster if I don't have to worry about that capital.
Let me get some specifics. So you dropped a lot of knowledge in there. So one, you did angel investments on your own and sourced them and did the whole thing. And we go through a laundry list. I almost want to make a packing list for solo GPs to think. So you did some solo on your own. You sold a piece of your Manco. That's a big deal, dude. I don't know if I
very
could do
small.
That. Okay. And how did you know? I mean, so my question was like, how did you know when you were ready? Like how many deals, how much capital, how much your Manco? And you don't have to get into specifics because like you said, everything scales, right? I think you could execute the same. You drop a zero off your check and my check. I think if you can show a consistent track record of, these small checks, if it's meaningful for you, you could do the same thing. But like, what is your packing list? You're like, okay, I feel like I'm ready. Or the packing list where the market tells you you're ready. Sold a little by Manco, did this many deals, allocated this much capital in a fund zero. Can you give me, or the listeners or solo GPs, like broad contours of how to think about what readiness looks like amongst this and other axes?
So those three things you mentioned, and also sort of the pre-work, actually, if for people not to self-promote, but I wrote a book called Starting Your Own Venture Investment Fund from scratch, like a how-to guide. But a lot of this stemmed from my experience when I worked as a financial advisor at Northwestern Mutual. They taught you how to sell. And one of the things that they made you do before you got hired was go out and assess your network. You had to sit down with 10 people and ask that person, do you think I'm the type of person that could actually build at my own financial services company, and why? And part of that was a weeding out process, but a lot of it was sort of a test to see if you could go out there and talk to people about build like your business. And there were so many people who couldn't do that. Not that they didn't have the network. They just weren't willing to to put themselves out there and do that. And I did. It was great. I did really well in that job, but took the same approach to building this company. I was like, okay, before I go out and do any of that, angel investing, talking to a potential anchor, whatever, I need to go out there and start to talk to people and say, hey, I'm thinking about doing this. Would you want to learn about that when I actually launch it? And just developed a list of people who I knew I would call on immediately when the thing got up and going.
Makes
And I
sense.
think that some people skip that step. And I'm not sure how many people that needs to be, but it is an instrumental part of that journey of discovering how you build visibility and interest in what you're doing. So you don't get out there and you're starting from day one after you've quit everything you did before.
Yeah, man, this is a lean startup for GPs, right? And it's so simple, right? People get so caught up in Carta and this angel list deal and this syndicate, that, but it's like, how about you just do this? Talk to 10 people, have coffee, and take the music, take the
Mm-hmm.
feedback, and see what, we have a
It's
saying in
time.
our house: if enough people tell you you're drunk, you should lie down. Like, some of it is just
I
like,
like that.
just test it. It doesn't require any capital. And to be honest with you, if you want empathy with founders, this is what we ask founders to do, right? Do lean startup, capital efficient tests. If you can't do that yourself, it's going to be may not be cut out to be a VC.
I was talking to a founder who, like, she was having some problems with her product. And I said, well, how many people have you interviewed and talked to about your product to get a better understanding of how you should build it? And she was like, oh, I haven't really talked to many people. And I don't know if I don't want to single her out, but I do think that we're living in a society where technology has dominated so much that the
Yeah.
human interaction has become a lot sort of pushed to the side. But the essence of doing that is effectively what people should do.
Yeah.
Talk to your potential customers, figure out what they want, and then build a product that meets that particular need or demand, not the other way around. Don't build a solution and then do it after the fact. So I think that's what most sales organizations, when they were like trying to weed people out, that's what they were trying to get us to figure out is like, do you
Yeah.
even have the market to do this? And that's what I spent a lot of time doing before launching Serac. But that's what I did before at another firm. So, these are like basic things to me.
Yeah. And I do think people skip this. And I can't tell with how many founders I talk with, they're going to prototype. I had a talk with a founder this morning about this. He's like, oh, we need more engineering. That's the thing. I was like, how many people have you talked to? Like, well, how do you know the requirements? Who have you talked to? Oh, this particular healthcare system is like, where's the paper? Where's the LOI? Right? Like,
Right.
and it's like, oh, I haven't talked to them yet. I haven't asked for it. That's it.
Yep.
This is the problem. And I think when we live in a world of AI and where it's easy to produce, um, I think what you're talking about rings true. And is if you want it to succeed in the world of tech and AI, I think the goal, particularly for where we invest early stage, it's about finding and being a better human.
Yeah.
And
I
you
think
got to be and you got to go first, and then go talk to those 10, and then see those commits, and then take the 6 people that said like, you are crazy,
right.
right?
Right.
Or
You should not do this.
you
You
should
you
not do
don't
this.
now as an entrepreneur. Right. Now as an entrepreneur and people like us that will probably take that as like, I'm gonna prove you wrong. I'm definitely gonna do it. But I balance that, Mike, with thinking about like the modern era of venture capital, where how do you use technology to enable you to do that faster? It doesn't eliminate the activity or the task of doing that, but I've been thinking about AI a lot and how do we as VCs integrate that in our practice for finding LPs or finding founders or building visibility among other VCs. There's all these different things. I think it's all about taking all this data and connecting the dots, but not using it to enhance the human element, not eliminate it. I definitely don't want to lose sight of that, but I need to get better at that for sure.
How can I ask how you're using it today?
I'm not using it today. That's what I'm saying. I want to use it. I want to use this technology to enhance what we're doing, to go deeper, faster. I just haven't figured out how to program that into our ecosystem, but it's not for lack of desire. A lot of it's for lack of time.
Gotcha. No, I've been using it hardcore for helping writing memos, but I'll be honest too. It's like, the way I diligence founders and their activities, that I'll use AI models to help me understand behaviors and really, go deep in the psychology and grit aspect of it, and work with unstructured data in ways that would have taken me a long time before. And I'm still experimenting. I haven't done the deep sea thing since that news broke today or the last this past week. But I do believe, I'm like you. I think the goal of AI is to build better humans. And
Mhm.
I think now, while the national security concerns about DeepSeek worry me a little bit, but the general view of like compute LLM going to zero and compute, becoming cheaper, and all this be commoditized, I see as a positive signal for investors like you and me, where we're really focused on the whole part of making carbon-based life forms
Right,
called
right.
humans, and that interaction better. And I think we only win when there are more competitors, minus the deep state Chinese thing going on. I think it's only going to be stand to gain for investors like you and me, either on the investment side or our own fund op side. I don't know.
Mhm. No, I agree. I've been reading about this extensively, and a lot of this just came out. But I hate to say this, and I know that Elon Musk has had a lot of he's produced a lot of consternation for a lot of people right now. But one of the things that he said about OpenAI from the very beginning was that he wanted to make it open source and that no one company should control its technology and it should not be a for-profit technology. And DeepSeek is proving him correct. And that's just my opinion. But when I was working out this morning, listening to the news and then subsequently reading about it, it's like I screamed in my head, this is what Elon was talking about.
Mm-hmm.
That
Mm-hmm.
this technology is so powerful that when more people have access to it, the better it is for everybody, in my opinion. It's kind of like the internet. Why is the internet not free? The internet being free opens up commerce like crazy, but we still have to pay for it. It's like it doesn't make any sense.
Yeah.
Or it should be significantly reduced so it's more accessible. But it's just things like that. So when I was thinking about DeepSeek, and yes, it is with a foreign state, but the idea that it's open source and like 93% less expensive, and there's still some issues with it. The app that to me is a big deal.
It's the right signal. It's the right signal. It may not be the right tech, but it's the right signal.
Yeah.
Hey, can I go back to something? And I've been wanting to talk about with our time. I want to talk a little bit about fundraising, because you said something to me at Culture Shift this last year that has stuck with me, and this is why I think you're one of the most intentioned people out there. So to set this up, Kevin and I were at a fundraising event, and I was all gripped. It was like I had talked to people, and Kevin looks at me. You look at me like, Mike, you and I know everyone in this room. There's nothing new here for us to do. and then, and I was just like, crap, you're right. And you started talking about your net new strategy of how you raised your fund. Again, without like, you don't have to give up any trade secrets, but just, can you talk more about your net new aspect? Because it speaks so much to your background, Serac, about bringing new people and access. But you didn't use this just as a way to like trumpet yourself. It was a very functional way to find asymmetric capital that I wasn't competing for, along with every other GP in the under the sun right now. Can you say a little bit about that strategy? About like, you and I know everyone here. You got to go in the rooms. People don't know us.
Yeah, I
That
think
had
that
stuck with me like an idea in the back of my mind. I can't get it out.
the events that are marketed are great for visibility, but I can't think of one event that I've ever went to where I raised money from an LP from one of them. And I don't think there's anything wrong with attending them, but I do think that as emerging managers, especially solo GPs, we have to think differently about who our LPs are going to be, because the ones that are in that room want us to prove our worth before they're going to give an allocation to us, especially in this environment. And I'm not saying that universally they won't invest in a firm like ours or yours. It's just what I've experienced. So when I think about net new, the idea of creating a new support base takes a lot of creativity and grit. And part of doing what we're doing as a small firm, we have the ability to be a lot nimbler. We have the ability to do things a lot faster and make adjustments such that we can enter into these markets and adjust the way our presentation deck looks for someone, or just what we're speaking, or to throw sort of micro events to invite new people to things that we're doing that may not have ever had exposure to it. So for example,
Yeah, I was going to dig into that because you just said, I want this to be real stuff, and you just said like these micro events because you've done the work and put all the grimy, elbow grease in, some details, and I would love to hear some stories on how you did it and what's worked.
For example, we did a dinner for doctors. We had a few doctors in this fund. And I was like, we got like 4 or 5 doctors. I bet they know other doctors. So I rented a room at a restaurant. It had 12 seats, and I asked every doctor to bring someone that they know. And that was fantastic. And it's a great event. Now I'm in communication with these doctors who, many of them, like I said, have never invested in venture capital before. So we're doing a series of these events to just plant the seed and educate people on the basics. And I don't talk about them and say, oh, the TVPI and IRR or this. And I'm like, here's what we're doing. We're going out there. We're trying to find the 25 best companies. We're going to invest in these companies, support them, work with them, and ultimately try to sell them at some point in the future to give you X return. And they're like, oh, I get that. But it's just like so simple when you break it down like that for people who have never thought about the asset class before. We also do sort of small micro events around working with other private market funds that are outside of venture capital to host happy hours. Like, for example, there's a firm here in Oklahoma City. It's a real estate investment fund. We have teamed up together where we go to a distillery. We will invite people from our network. They invite people from their network. And it might be 15 or 20, no, it might be like 10 or 15 people there, but it's like movers and shakers in the city who are just there to meet other movers and shakers, but we're there to just sort of be normal and casual with them. We don't talk about business. It's just like a friendly event. And then at the end of it, you're like, hey, it was great connecting. Let's grab coffee. And then when you have coffee, that's when you do the connection and explain a little bit more about what you're doing. I have picked up investors from that. Again, people who said to me, I'm investing in Serac Ventures because I've thought about venture capital and private markets. I just never knew anyone that was doing it. So XYZ later, they're investing in the fund. So it's just like smaller things like that we have the opportunity to do. And maybe the last point I'll put on this is sort of my theme for 2025 is to grow where I'm planted. And the benefit of that is thinking that I don't have to talk to all of these investors around the world who everybody knows, but there are people right where I'm planted who have resources and want access to what I'm doing. I just have to put in the work to find them and also make what I'm doing easy to understand such that they can get on board and be people who can support me long term. So that's sort of that's been resonating with me. Like, and I'll tell it to other people, grow where you're planted and don't worry about all these things that you're seeing in the market because there's so much opportunity right where you are. You just have to figure out how to exploit it.
So, okay, can you, I love that. Grow where you're planted. There's abundance everywhere. Can you say more about that? Because like, look, the objection is like, oh my God, these checks aren't going to be big enough. I have a 25 million cover on my fund. I don't know what I forgot what yours is, but like
30 million.
30 million, like, can you get there? I mean, like the size of these checks to run all these down, how do you manage all these LPs? What's your answer to that? Like,
So
object.
when we sort of made this decision to start doing that, we were sort of hovering and stuck at a number. But then when we said, all right, we're going to double down for the next 6 months just to test this thesis. And then our largest investor is here. They put in a $5 million check. And a lot of it had to do with just doubling down on what we're doing here, spending more time with them, different things. And for a $30 million fund, a $5 million check is a really big deal.
Huge.
It's
Congrats, man.
huge.
Yeah.
So that reinforced this idea of, man, we just need to really grow where we're planted. But philosophically, the extension of that also pertains to our portfolio companies, where we just backed a company in Birmingham, Alabama. And these guys are harnessing their talent and technology to serve a base of customers right in their community that no one is thinking about. And it just resonates with me to be like, man, these guys are growing where they're planted. And this technology has enabled them to build this amazing business and access customers that need what they're doing. But if these guys were thinking, oh, we're in Birmingham, we need to start competing for customers in New York and San Francisco and Chicago, they probably wouldn't be doing as good as they are. So now I look at it as concentric circles, both for founders like them and for firms like ours. We need to strengthen and do the best that what we have with where we are. And then as we grow, we can start expanding the circle of our LPs regionally, then nationally, and then ultimately, as we're raising bigger funds, internationally. And that's how I think about the evolution of Serac. And LPs ask us, well, tell us about what you're trying to do fund 3 and 4. It's like, well, for fund 1, I think that the majority of our support is going to come from around here. Fund 2 and so forth, it's going to expand. But to raise a venture, like a scalable firm, you kind of have to build a solid foundation and then grow from there. But I think a lot of emerging managers start to focus on the outer concentric rings before really building that solid foundation right where they are.
Guilty. I mean, guilty. Like, so count me in that group. I want to, I mean, like, I want to ask about this $5 million anchor without but like, did they invest because you're going to have an Oklahoma City thesis, or was it just like all the work you put in validated the grower you planted? You just put in the reps, and they're like, look, we get it. We've de-risked it enough. We've watched you. We prefer you be in Oklahoma City, but if not, we're just backing you because of your time. And then how did that ladder with these? I mean, for me, my individual checks, kind of like in the 2,500K range, as I like pick these off one at a time. How did you balance both since you played basketball, the inside game and the outside game?
I think a lot of people assume that if you're in Oklahoma or wherever you might be, that investors just want to invest around there. But I think that part of the benefit of talking to investors in smaller markets is they want visibility and exposure to the best of both worlds. And the fact that we're in here, but we're investing in opportunities in all these different markets is a plus. And I've not been told by any investors who were sort of geographic or regionally focused to the extent that they are not going to participate with us. Most investors say, man, we love the fact that we can get exposure to companies on the East Coast or here in the middle. So that really has not been an issue with anyone that has invested with us. It's been more of a plus.
God, that's great. That's not been my experience. Like I deal with all these regional economic development. Like we have all this money. If you invest in this zip +4 region, something. I'm being a little exaggerated, but it's like, okay, well, Yeah.
Well, one of the things I said to one of our newest investors, and I said this to a bunch of people in Chicago as well when I was talking to them, and I don't have any investors in Chicago. I used to live in Chicago. I find it surprising I don't have any investors from up there. But this is quite profound, what I'm about to say. People who think like that, they say, we're going to back managers here that can support founders here. So I'm like, okay, well, if you take the same approach to trying to do something different, how do you expect anything to change? What makes more sense is to back a manager like me who's looking at your market from the different perspective to
Yes.
identify opportunities that the managers that you want to be there don't see. And this just completely changed the perspective of what they were saying, because it's almost counterintuitive to say, I want to back managers that are in Chicago to back Chicago-based founders. I'm like, okay, well, do you? Because if you back managers there that are already doing what they're doing, and nothing's really changing in your ecosystem, how do you expect more Chicago-based founders to get funded? You need someone like me looking at the market from a different perspective to find those founders that the managers there that aren't investing in. I said this to another state and they were like, that's such a good point. And then they backed us, because that mentality just fundamentally does not make any sense.
Yeah. Again, I grew up in Ohio, so Brown, sorry. And I've been home, trying to run that same gambit. And I got to tell you, I haven't gotten that love with it. We want in Ohio for Ohio and, from Ohio. I was like, I'm from Ohio, but, I said the same thing. It's like, I'm from here and I'm not from here. I can help bridge the gap. And
Right.
I credit you because I haven't gotten that. I've tried to run that ploy, but it's been, I have to say, I don't think the regional LP community feels that way universally. I would say it's more contrarian, and kudos to you to find that.
There's a guy here that runs a big firm in the private equity space. They do a lot of different types of investments. One of the things that he talked to his investors about was he wants to be located here. And he's telling his investors, like, hey, if you invest with me, I'm going to invest in companies that are outside of this region. But one of the things that they do strategically is work with every investment that they've made to do business here, to bring their products here, to bring their services here, to do things here. So there's this relationship between them. And I just think that it's so novel to say that, okay, they built a manufacturing facility here in Oklahoma City, and they're targeting companies outside of the state to invest in that need those services that this company can manufacture. So we think about the symbiotic relationship between the two. It's kind of like, okay, you're investing money over here, but now they're spending that money here. It just makes so much sense. So we just have to, I think that just thinking about that stuff differently and having these sort of blunt conversations with LPs, whether they invest or not, some of them will, most of them won't. But it does, I think, take shaking up the industry a little bit to just think a little bit differently.
Yeah, I love that. I could chop it up with you all day. I don't know if you heard my Slack going up. That's actually a founder I need to get to. So,
But yeah,
but
yeah.
no, there are a couple. I'm going to change some of the lightning round questions on you based on some of the stuff that you said. Um, the first one is this. Um, what's the typical? What is your typical response to being a solo GP? Oh, what if you get hit by a bus? Right, all that. So I have two questions in the lightning round. One, how close have you ever been to getting hit by a bus? Please disclose. And second, what's your answer to that type of objection? Let's start with the bus. Have you been close to getting hit by a bus?
I've never been close to being hit by a bus, but the last time I was in New York, I almost got hit by a cab, but I don't think that's uncommon.
I'll get that on edit. All kidding aside, then what's your response to that objection to solo GPs, if you even bother to levy one?
I think that risk is everywhere, but it's about probabilities. And most LPAs are built and designed to think about that risk in a manner that doesn't leave LPs hung out to dry, but also think about it from the standpoint of telling people that we're building a firm. We're not just raising a fund. So while that might be the situation today, factually, in the long term, in the short term, that's unlikely to happen. And then in the long term, as our firm grows, that risk is almost eliminated because I don't expect to be a solo GP for the rest of my career.
So GP dating, you just led to the other one. I'm totally changing this on you. It's like, would you like to give me an idea, if you don't have to list the GP itself, but other solo GPs you're interested in dating or characteristics thereof?
Whenever I was working at the fund of funds, one of the things I loved about Tomas, who used to be at Red Point, who started Theory, was he had this conviction on this thesis that he just went out and built it based upon what he was doing. And his firm wasn't in complete agreement with what he was thinking about doing that they wanted to do. And Red Point's a great organization, but I had a long conversation with him about what he was doing. He showed me his pitch deck and stuff about what they were doing and how the conviction around that was so strong that resonated with me. And I knew that whenever I was about to launch, this was years ago, that I would sort of follow that same sort of sentiment of just sticking to what you're convicted on and not letting anyone tell you anything differently. So I think he did a really good job of doing that.
That sounds like a solid GP date. And for those listeners who don't know what that's, I mean, like, it feels tawdry, right? In the solo GP, I'm like you. We're starting together, starting alone, but I don't have the same desire to forever. But so there's a fair amount of solo GP dating that's going on. I'm sure people in the LP community know, maybe not. But
Yeah.
I'm always interested. Give me your ideal solo GP date. I got a question for a big pitch, walk-up music. If you had walk-up music before a big pitch for an LP or founder, what would be your walk-up?
I'm a huge fan of Jill Scott. One of her favorite songs that resonates in my mind is the song called Golden. And the chorus is living my life like it's golden. So I think about that all the time, how I just feel so fortunate to be able to do this job that the lyrics of that song really resonate with me.
Yeah. Jilly from Philly.
That's right.
I love Jill Scott. I love the roots. Very cool. Well, listen, I could talk to you all day, and I couldn't have thought of it. And I know there's technical things we're gonna have to fix and edit and whatnot, but I really appreciate hanging out with you. I wish we could do it more.
Yeah, I appreciate being the first one on this podcast. It's kind of like a historical moment right here.
I guess. And like I said, you were invited to take a bedroom in the house, and you ended up in the virtual living room. So I'm glad we did this, and you actually got to go home that day. But I think it's a good way to bring this all full circle for what we're doing. And congrats on all your success. And I'll see you out there on the road or on another cap table, another call, man.
Love it. Thank you again for the opportunity.
All right, man. Cheers. Be good.
Cheers. See ya.